Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, I'm going to specifically talk about breakout trading strategy. How do you avoid false breakouts and how do you identify what is real breakouts? And also, I'll explain what is stop loss hunting. How do large institutions hunt for specific stop loss orders and how you can avoid it. What is breakout trading system? Breakout trading system is nothing but you are just trying to identify a specific range of the markets. It could be between any time frame. It could be between 9 o'clock to 10 o'clock, 10 o'clock to 11 o'clock. You just have to set a specific time and see where the price oscillates. What is the high and what is the low during this specific range. And when the price is breaking out from this range, that you call it as range breakout trading system or breakout trading system. So specifically, there are two types of breakout trading system. One is identifying the price range and entering into the markets when that particular price is breaking away from the range. And the second one is identifying the volume range. You have to check for the volumes, and when the volume starts increasing and tries to move much higher, then that is also one of the reasons where you can enter into the markets. Let's consider how do you identify these range breakouts. So first, I've opened a Tata Motors chart and I've plotted a weekly time frame chart. And now we are going to identify when specific weekly range is getting broken and we are trying to enter into the markets. Say this. Let me open a recent chart of it. Okay, currently Tata Motors is trading at all-time high, right? So in order to how do you identify these range breakouts? You just zoom into the chart and you plot a specific range lines here. So I'm plotting an horizontal line here and then I'm plotting a line here. So for us, this is the range. So between 2021 to 2023 June, Tata Motors was trading in a very tight range. So for me to go long in Tata Motors, I want the Tata Motors weekly close should be above this line. Only then I would consider that a breakout has happened in Tata Motors on a weekly time frame. See, the larger the time frame, the powerful that specific breakout is going to be. So along with breakouts, we have to focus on the volumes as well. So one is price, the other one is volume. So for an example, if you see this chart where this is the range which it has broken, right? So let me place this range here and the lower range is here. Yeah. So now if you see, there is a very big range that was broken here. So this level, if you see, the weekly candle has closed above the range. So we'll be going long here. So now if you look closely, other than the price, so the market was completely in downtrend. And by 2021, the Tata Motors broken up of a weekly range that was almost 2 years of range. So the larger the period, and second thing is it is a weekly time frame. So when a range is breaking up when compared to a weekly time frame versus daily time frame, weekly time frame will be much powerful than the daily time frame. So that will be more valid and it will have lesser false breakouts. So in this case, you not only see the prices breaking up from the weekly range, and also you are seeing that specific volume is also breaking up at a much larger scale. So that is more important. So when you give importance not only to the price but also to the volume of that stock, then it shows that the range could be really very true and it can move much higher. And that is exactly what has happened. So once that specific range was broken here in 2021, the market continued to move up. And if you have to identify the best breakout trading indicator, then I would highly recommend you to use super trend, not on a 5 minutes time frame, not on a 10 minutes time frame, and not even on a daily time frame. I would suggest you to use it on a weekly time frame when you wanted to do a positional trading. So that is when you can capture a very big large move. For an example, if you see, when I plotted the range movement, before the actual range breakout happened here, but the super trend gave the buy signal at a much earlier stage itself. So as you can see, this is exactly when the range was broken, and then the overall buy signal was given by super trend around 120 rupees itself. And from 120 rupees, it all the way went till 400 rupees and gave you sell signal only at this place at 400 levels. So almost from 100 to 400, you would have made more than 200% returns here. and then once it gives you sell signal, don't short into the markets. You just exit and you have to wait for the another buy signal. And exactly another buy signal came exactly at this place around 460 by 17th April 2023, and that gave you a huge buy trend, and from 400 it went all the way till 1000 rupees and gave you a huge profits. So that is how you can write the complete trend. If you have used 5 minutes time frame or daily time frame, you have to enter in and you have to exit at a multiple times. So this is going to give you a lot of hiccups, a lot of false breakouts. But in this case, what happens is by moving to a weekly time frame, you are riding the bigger trend and capturing the bigger move. Thus you are avoiding all the false breakouts. So the only way to rightly use these indicators is to go on a larger time frame to avoid all the false breakouts. So let's consider one more example. I've used a bell stock where I've opened a weekly time frame, and as per the chart, this is the high of almost 90 rupees is the overall high that it has made, but after that there was a retracement, right? So now we are waiting for the weekly breakout to go above this level. So let me plot the chart. So 90.9 is the range breakout level we are waiting for the market to move up. So exactly by July that particular range was broken, but if you see, it could be a false breakout because the candle moved up and then closed below. So when a particular price is crossed but it is not closed, then that might not give you a decisive buy signal. So we want a stronger conviction here. So what we have to do is you wait for the next couple of candle to close above that line. So with respect to bell, that is exactly what has happened. Let me zoom in and show you where. So this is the specific candle where it is crossed our high but closed below that. So you are waiting for the next candle to close above our specific weekly range, high range level. And the next candle exactly happened to be that, exactly where it crossed and then closed above our weekly range. So we would have gone long here. And from almost 90 rupees, currently bell is trading around 230 rupees. So it would have given a clear cut buy signal there and we will be holding with a very good profits. So whenever you wanted to avoid false breakouts, don't just enter into the markets once the range is broken. You wait for the candle to close above that range. If that specific candle is not closed, wait for the next week candle to close above that range and then enter into the markets with that specific stock. So let us talk about stop loss hunting. Lot many times you would have seen that you would have entered into the markets and kept a stop loss, and there could be instances where market can come down and hit your stop loss exactly at your level and start moving up in your direction. So this has happened with multiple people. Mainly it is the point at where the stop loss that you are keeping is more important. The maximum action will happen with respect to day high and day low of any specific stock. So for an example, this is a daily candle of a stock. If you observe what is the high and what is the low of that stock, that is where the maximum action has happened. So when next day you trade, what happens is most people, if they go long during any time of the markets, they might be using previous day low as a stop loss. So when you use previous day low as a stop loss, lot many people will know that okay, this is some place where lot many orders is going to sit into the markets. So if I just go and hit the stop loss and then start reversing, then I can hit more number of orders at that level. So most people, what they tend to assume, these large institutions, what they tend to assume is there are retail traders who will keep previous days high or previous days low as stop loss. So they know that there will be large number of orders that is going to sit during this specific extremes. So try to avoid stop loss, keeping stop loss in these extreme levels. Instead have some buffer levels. Try to keep certain percentage of above the previous day high levels or below the previous day's low levels. So if you are going long, just don't simply use day low as a stop loss or previous day low as a stop loss. Instead, try to check what is the swing high or swing low and check what is the pivot high or pivot low and accordingly choose those ranges. When you try to use these valid ranges, visible ranges like previous day high or previous day low, then there could be instances where stop loss could hit and then start moving in your favor. And the second thing is try to keep avoid keeping a stop loss in big round numbers. Say for an example, if a stock is trading at 200 rupees, try to keep the stop loss avoid keeping the stop loss at 50 rupees, 100 rupees, 150 rupees, 200 rupees. So these are some round numbers where large number of actions can be at play. So try to keep avoiding these things when you're trying to trade. So this way you can avoid getting trapped with respect to stop loss hunting. So what you can do is when you're trying to enter into the markets with breakout trading strategy, always use a higher time frame. That is when you can avoid many false breakouts. So instead of trading with 5 minutes or 10 minutes, directly move to a weekly time frame. Even daily time frame can give you a noise, but weekly time frame will totally avoid all the noise and you would be able to ride a big trend with any kind of stock. And the second thing is try to use indicators like super trend indicators, where that can give you a clear cut buy signals or sell signals whenever a trend establishes. And also when you use super trend on a lower time frame like 30 minutes time frame or 5 minutes time frame, you will see a lot of false breakouts, because lower the time frame, higher the noise. Higher the time frame, lower the noise, and thus resulting in a less false breakouts. And as I mentioned earlier, addition to the price breakouts, there are volume breakouts can also happen. So when you're trying to trade with any kind of stocks, check if that particular stock is closing above the specific weekly range. If yes, you can buy that. And second condition, if you want a recondition or additional condition which you wanted to emphasize on, check for the volumes. If that day volume or if that week volume is much higher than the last 10 weeks volumes, then that is a clear cut signal that large number of interested buyers are coming into the zone. That can give you a large bullish signal where going forward market can keep moving in the same direction. So in addition to the price filter, focus more on the volume filter as well. When both the ranges are broken out, then that is a huge buying opportunity for you. And with respect to risk, as I mentioned earlier, check whatever the candle that is breaking away from that range. And if the weekly range is broken out, then use that specific candle low as your stop loss. This way your overall risk is very minimal, but the reward is so huge. And finally, with respect to stop loss hunting, definitely there could be large number of concentrated orders sitting on day high, previous day high or previous day's low. These are very visible ranges. So try to avoid keeping your stop loss on those visible ranges, and also try to avoid keeping stop loss on certain round numbers like 200, 500, 300, whatever the specific stock price could be. If you're trading with Nifty or Bank Nifty, try to avoid keeping stop loss on big round numbers. That is when most number of actions will take place where your stop loss might get hit and market might move in your own direction. So these are the things that I wanted to convey. I hope you found this video really helpful. I'll see you guys next week with another video. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.